Thank you. Thank you, Lucia, for the warm welcoming. Thank you, everybody, for being here. And thank you, Jay, for coming to Guatemala. An applause.
Having me. Thank you for having me.
So, this is actually the third time I'm on this stage. So it's always nice to share on this stage. And this talk came about basically because, well, I met Jay in Miami at the Bitcoin conference in 2022. And he had an interesting proposal. He had a very interesting proposal of how to approach Bitcoin from a risk managed perspective. And, being from a Latin American disadvantaged financial ecosystem, it was very interesting to see how Bitcoin opens the door for us to have access to real global world-class tools. And one of the things that struck me most was Jay's story. I've talked with many people from finance, from Wall Street on Bitcoin. And generally they say, crypto and Bitcoin is a crypto. And it is key to understand the difference is that Bitcoin is not crypto. And for us, as Guatemalans and Latin Americans, this really represents a very important differentiator on how we invest the effort that we've generated, because in our jurisdictions, it is way more difficult to generate value and wealth than in advantaged economies. So I think it's important to discern that so that you understand what you're doing and you see the use cases in it. And that's why I invited Jay to share his story on how he discovered Bitcoin. So Jay, let's start. When did you hear about Bitcoin? Tell us a little bit of your background.
Yeah, let's start. So first of all, I don't know if is this too loud or is this okay? Good? Okay, great. So I think like a lot of people, I was introduced to Bitcoin a while back. And so for maybe some of you, this is something new that you're just first starting to learn about. But for myself, I started in about 2013. And what's fairly common in the industry, at least in the investment industry or in the United States, is that many people are introduced to it and then they sort of brush it aside. And then they're reintroduced to it and they brush it aside. And so from 2013 to 2018, I did some research. People would discuss it with me, but it was still too immature. The regulations and the infrastructure in the United States wasn't sufficient for someone like myself to invest. Having said that, I really didn't fully understand what was going on. And so Bitcoin in and of itself requires a bit of forward thinking, and it requires a bit of personal investigation so that you can truly understand what it is and its long-term value proposition, which in my opinion is very, very significant. And so in 2018, it took me about a year and a half, and I just want to put that into perspective because I'm a professional investor. I own an investment firm up in the United States, and I've been investing for over 25 years. So it's not like new technologies aren't presented to me on a regular basis, and I don't, I'm not able to take a short period of time to process what they are and what I might perceive as their value proposition. But in this instance, it literally took me about a year and a half of speaking to different people that were in the industry, that were building the technology, that were working hands-on to truly understand the power of what is going on. And again, in my opinion, the impact it is literally going to have not only on the financial services industry, but has the significant potential to change just so many different aspects of how we interact and how we conduct commerce in general. And so in 2000, after I was able to finally grasp the depths of what Bitcoin was and the idea, which I think is most fundamental for, if you walk out of here with one basic understanding, is that you go on TV or you read and people talk about the price of Bitcoin and how volatile it is. But that's just one aspect of what Bitcoin is. Bitcoin is also a network, and it's one of the most powerful, if not the most powerful, and the most secure supercomputer that exists, and it is a decentralized supercomputer that's made up of tens of thousands, if not hundreds of thousands, of computers all over the world. So this means there is no Bitcoin company. There is no CEO of Bitcoin. There is no voice other than the voices of the people who understand and are helping to build out this ecosystem, to either defend or explain or promote what's going on. So what's going to wind up happening is, as the applications, yeah, because the use cases, which we can talk about, are very dramatic and powerful and impactful. But right at this period in time right now, it's sort of like 1995 in the internet. And I don't know who was old enough here besides myself. Maybe there's one other person or two. Yeah. But in 1995 in America, I don't know how it was working down here in Central America or Latin America. But we had a computer. You put in your AOL disk. You'd wait for it to download for 45 minutes or a half an hour, and then you were in this AOL universe, yeah? And we could send emails and read information, and we didn't truly understand what was coming. For us to conceptualize that we could make phone calls and video, and really, I use a word, how simply and ubiquitous, which really means however present it is in our lives today. And we don't even realize when we're using the internet. It's just we're using it all the time. And in my opinion, the Bitcoin network is going to evolve and have a similar, if not actually greater impact on society than the internet has actually had. Because we're able to leverage what the internet has done and then exponentially improve upon that in ways that I think will be profound, and maybe we can't even understand it yet. And so that's the difficulty of Bitcoin. And everyone has their own personal journey to go on. But we're in the midst right now of the phase when the foundation and functionality of it and the growth of it has gone beyond escape velocity. Again, in my opinion, this cannot be stopped. There's not a government that can end this. It's about the people. And that's one of the aspects of it that makes it truly valuable. Now, I just want to say one other thing, if I can. At this point in time, one of the most important issues to get across about Bitcoin is that it is the most secure and most decentralized network that we've ever had, and of all the protocols that we have. But in the last 2 or 3 years, Bitcoin's problem was always that it wasn't scalable. So unbelievably secure and unbelievably useful, but not scalable. And today there are a number of second layer protocols that sit on top of Bitcoin that make it scalable. And the one you'll probably hear about most is Lightning. And why now is such an unbelievable time to be learning and thinking about Bitcoin is because about 4 or 5 years ago, we started to build out all these exchanges and all the infrastructure that you see now. So you have wallets, and you can buy and sell different digital assets, including Bitcoin, and store them. But what Lightning is going to do, like when the internet was in 1995, and then we looked 10 years forward at all of the applications and the uses and the easy way that we could interact with it. This is all happening now. So if it took 10 years for those use cases to develop on the internet, typically technologies tend to occur at a faster and faster rate. So it wouldn't surprise me if in the next 2 to 4 years we started to see some very significant use cases and applications that we're all using on a day-to-day basis. And at that time, we will most likely see Bitcoin, which is the collateral that powers the Lightning Network, be significantly higher. And so the issue, our firm right now has a $500,000 price target. We don't put a timing on that. But that could be 5 years, that could be 10 years, that could be 15 years. But from where the price is right now, that's a very significant run up, and it's a lot of appreciation. And so, figuring out a way to invest in that asset that won't enable the significant volatility of Bitcoin to prevent you from staying in the long-term investment thesis is the goal of what our firm is working on and trying to help others to get invested and to keep those investments so they can benefit from it.
Yeah, you mentioned a lot of interesting points on the network and the asset. And to bring it down in the asset, it's very simple. It's 21 million Bitcoins and there will never be more. Why is it like that? Nobody really knows the number. It was just set by the person who wrote the code. And it's a set rule of code that nobody can change anymore. It is important to understand the immaculate conception of Bitcoin because it is irreplicable. This cannot happen again. The fact that we're here talking about this is nothing short of a miracle. And when you have that, then you go, okay, so I have a limited asset. Where are the use cases? And the more the use cases is, the more demand there will be for this limited asset. And I think Lightning, and it's something Jose, our CEO, has also said in publicly is, Lightning is to Bitcoin as the email was to the internet. The email gave a true palpable use case to the internet. To date, we have thousands of different chats throughout the world, but email is now the official communication channel on the internet. And why is that? It's very simple, because I can have Proton Mail, I can have Yahoo, I can have Google, but I can always receive this email, because this email is a set standard of code that communicates something. And now this communication suddenly can travel at lightning speed anywhere around the world, and it allows you to really use that network as a distribution of value in real time across the world. And the interesting thing of how we were born as IBEX is we started as a OTC desk just selling Bitcoin because we see the value in the asset. And then El Salvador, when they released they made the announcement of the Bitcoin law in May 2021, that's a year ago, we were like, okay, we have to do something. And there we really started to understand the power of the network, and the company pivoted till then. And by now we have offices in El Salvador, Guatemala, Mexico, Miami, New York, and in a year we grew to 36 people. And we started to get to meet people like Jay, who understand Bitcoin and understand it in the complexity of our business model, because we're focusing on enabling payments, but that also gives us a line to understand Bitcoin's industrial use case and develop real investment tools for our customers out of our digital wealth management division. And it's really an honor to be able to work with people that have so much experience in this and come from a traditional world, understand it and pivot and apply it. So, Jay, why do you think, you mentioned right now, but let's go on Bitcoin's industrial use case and illustrate a little bit more why now?
Yeah, so the applications that I'm discussing with you, we can talk about some of the use cases to illustrate the value proposition and how that's so relevant to banking the unbanked and the financial ecosystem as we currently are constructed. Yeah, so when we think about the current use cases and the ones that are going to hit the market the soonest, the first has to do with or the summary has to do with global payments. And so first of all, the opportunity to be able to move money around the world in real time from any currency or jurisdiction to any currency or jurisdiction using the Bitcoin network in almost real time at almost no cost is mind-blowing. And trust me, as someone who's been on Wall Street, but we say worked at banks and financial services industries, I understand that today if I want to send a wire from one part of the world to another, it might take 3 or 5 days, and it may take maybe 10 or 15 days until there's final settlement. So to have a network and an infrastructure that can replace the legacy infrastructure and facilitate that outcome instantaneously at low cost is disruptive. So you want to talk about disruptive technologies, that's disruptive. We look at your country, and we look at your neighbor, El Salvador. The reason they adopted Bitcoin as legal tender has to do with, to a great extent, with the fact that Bitcoin's network can facilitate remittance. Yeah? And so if you look at El Salvador as an example, let's say their GDP is 40% remittance, and today they're paying somewhere between 20 and 30% for that remittance. And so now if that cost goes down to 1%, excuse me, that you've now put back into their economy somewhere around 15% growth. Yeah? And for El Salvador to have, if they can get everybody on that platform, which is why they released the Chiva wallet, and then get the people on the other side who are sending them money to utilize it, which they are in ever increasing percentages. And so for a country like that to have that type of growth and impact on their GDP, which is only the start, and it's just so incredible, right? And then the third use case that is currently happening has to do with credit card settlement and the settlement of assets. And so at its heart, the Bitcoin network is a transaction processing system that allows for trusted transactions to occur in a trustless environment. I'm going to say that again because it's so important. It's a transaction processing system that allows for trusted transactions to occur in a trustless environment. And the use case for that for asset settlement in general is so significant. We will see a time, in my opinion, when all stocks, bonds, commodities all settle via the Bitcoin network. We can think into the future as we're thinking about future applications where we will own important things like our homes potentially and physical assets like real estate via NFTs on the Bitcoin network because it is secure and it cannot be stolen. And there are just an unlimited number of use cases to secure the internet and our communications and all sorts of other interesting applications. Now, every single one of those applications, why now? The Lightning Network is what is called a collateral network. So to facilitate the activity that I've just described to you, it requires that a certain amount of Bitcoin be posted and collateralized on the Lightning Network. And what that does is it will take, as the commerce that's conducted on that settlement network continues to increase and increase, the 21 million supply will continue to get reduced as that collateral is placed on the Bitcoin network. And so what that says to me is that the demand-supply construct, we're seeing increasing important use cases that will continue to drive ever greater adoption and demand. And all of them, or many of them, not all of them, but many of them, will facilitate the supply shrinkage. And so, lower supply, higher demand eventually will lead to a higher price. And so as a store of value, we can talk about the use cases there, but as a store of value, Bitcoin is very, very interesting. In the next 6 years, it will become one of the most scarce assets in the world, surpassing real estate. And the network itself will just continue to feed upon itself and drive significant adoption. And I said before the word ubiquitous, we won't even know that it's happening. So this is just, of all the innovations that we're talking about here today, at this conference, which has been an unbelievable conference and so much knowledge sharing that's going on, this is probably one of the ones that will have the greatest impact on our lives in the shortest amount of time. And so that's one of the reasons that we're very, very focused on it.
Yeah, it's impressive to be alive in these times where we're seeing Metcalfe's law unfold right in front of us and disrupting the financial system as we know it. In general, I think in all the conversations I've had during this conference, which have been a lot and very intense ones, people get sometimes confused with NFTs and smart contracts, and they say, NFTs is a use case, smart contracts is this. There's no real definition of what a smart contract is, really. It's just a very generic word to describe something that is trying to find a standard so, it really brings in value to society. So in a way, you can describe the Lightning Network as a smart contract that lets you earn yield on your Bitcoin whilst you hold your Bitcoin. So the difference also on that is that because there's no CEO or company of Bitcoin, there's nobody really promoting it and doing all this heavy marketing lift behind it, right? But let's not forget that every other crypto is just a project pushed by a person or an institution looking to fulfill its promise. Be it good, be it bad, it really doesn't matter. So if you're doing an NFT and you want ownership of something and track this ownership throughout your lifetime and be able to give it to your kids, it's a first principle that you have to think, on which platform am I going to do it? Am I going to do it on a platform that will be here in the next 50 years or that it won't? And that's where Bitcoin is the only one that is given that it will be here in 50 years because it has already amassed so much monetary value and it's giving so much true, like real use cases to society of things that we need. That it will always be here. And a very good example on this is Lightning Labs. They're working on a, let's say, smart contract called Taro. And Taro, which will allow you to hold a stable coin, like dollars, literally dollars, on your phone and move them through the Lightning Network. So now imagine we have, I think over 60% of global society, like humanity, doesn't have a bank account. In Guatemala, it's 60% straight up. All the success and all the big buildings you see from the banks is out of productive tax-paying 40% of the society. So imagine where our countries could be in Central America. We would all contribute, pay our taxes, and have access to financial tools. And since we don't, there is a need to be able to access other financial services because our financial inclusion problem is a modern one. And we need modern tools for this. And putting $1 on your phone, which Latin American or Asian person wouldn't want to have dollars on his phone? And then create a true track record of how he moves that dollars and how that income comes in and how that income goes out, and be able to go to a place and show, look, this is my track record. And you cannot deny that this is false because I can prove it. It's on the Bitcoin blockchain. So this will be ready within a year. And I think many are not really conceptualizing what is unfolding in front of us because we're just seeing the tree and we're not seeing the forest. And it does take a lot of effort on our own personal side because we're our own biggest enemy to push ourselves to learn and study more of this. We try to dismiss it, as Jay told in his story, very easy and very quickly. But it really is, we have to study and understand this more so that we can actually then start applying it.
Yeah, so I would say a really great way to think about what's going on and why there's a significant importance and why as an investment firm we're very focused on it is, if you think about the other networks that we're aware of today, Facebook is a social network, Amazon is a retail network, Google is an information network. In all of those networks that have come behind Bitcoin, and Bitcoin is a monetary network, the user of the application got the value of that application, right? We got to use it. We benefited from it. But the company and the shareholders of that investment were the ones who benefited from the economic value that was created. With Bitcoin, when you use the application, you own Bitcoin. And as a result of that, you also get the value of the economic benefits of the growth of the ecosystem. And this is a hard concept to get your head around, but if you just think about that for a second, and you think about the wealth generation that was created through those other networks, and we're seeing a similar, if not significantly greater adoption with Bitcoin for all the reasons we've discussed today, then you can then start to conceptualize and think about what might be the wealth value or the store of value that's created by owning the Bitcoin. Now, we just have a short amount of time, so I want to give you a thesis as to why I'm doing what I'm doing. So as a risk manager, what I think about is how can I maintain and get exposure to something and minimize, when I say risk and volatility, all I really think about is the drawdown. How much will it go down from the top to the bottom before it starts going back up again? And nobody knows. So by using a rules-based approach and implementing and sticking with that and risk managing with cash so that we're invested in the asset when it's going up, and then as it starts to go down, we systematically get out of it, and then have capital to reinvest when it's sort of bottoming and going back up. We're focused on minimizing these 80 and 90% drawdowns in Bitcoin, which will continue to occur because it is a very thinly traded asset. There's not a lot of supply available. So as this demand comes into the market, the price rockets up. And then when we go through periods of time when liquidity comes out of the market, like we have right now globally, and people are selling things, it doesn't take a lot of selling to push it down significantly. So by minimizing the drawdowns to something that's, let's say, in a 40 or 50% range that's similar to owning stocks, then we can both have a more significant percentage of our investment portfolio invested in Bitcoin. Whereas maybe many people will say 1 or 2% because it's very volatile and I don't know what's going to happen. And now maybe we can have 5, 10, or 15%. And maybe we don't get 100% of Bitcoin's return. Maybe you only get 70 or 80 or 90%. But by having a larger portion of your portfolio in it, that's better. So that's our investment thesis. So the important thing for you to take away, I think, as investors yourself and as making decisions about the importance of different investment opportunities and how they present themselves. One, we need to take a long-term approach. We can't be looking at day to day, and it's amazing, 24/7, 365. These assets are trading. I can wake up in the middle of the night and it's doing it. But it's almost a bad thing from an investment standpoint because you have to think long-term. Investing is not, you're building companies here. You've had family companies that have been built. You don't generate wealth by buying a building and selling it the next day, and then buying it the next day and selling it the next day. You don't check the value of the building every day. You know, we look long-term, and wealth is created over 10, 20, 30-year cycles. That's how real wealth is created. And so I encourage you all, whatever your journey is or whatever you do, to take that mindset and think about that mentality, because that's how true wealth is created. And the last thing that I'll say is, one of the most interesting things about what's going on right now is while we're in what people call a crypto winter because the markets are down significantly, people can see this as a negative or they can see it as an opportunity. But what I can tell you is the ecosystem, what's going on with the building out of the applications in the industry and the intellectual capital that's coming into from these areas of the universities around the world and people who want to help build this is growing as exponentially, if not greater, than the adoption is right now. So the fundamental growth of this infrastructure and what's being built is nonstop and is ramping even faster. So, you know, judging something by its volatility or its price in the short term is not a great way to invest for the long term. And so I encourage all of you, I hope this was helpful in some way. I'm sorry we didn't have time for questions, but I encourage you all to learn, explore. There's so much information on YouTube and various different places, and I wish you all very good luck. And I want to thank you all for inviting me down here and including me in this conference. It's been a special experience, and it's a beautiful country, And all of you have been very welcoming, and I want to say thank you.
Thank you, Jay.